After years of delays, Saudi Aramco finds itself on the eve of its first foray onto a stock market. Bookrunners have recommended pricing its initial public offering at 32 rials per share when it trades in the morning. That's at the high end of a price range that values the world's largest oil company at $1.7 trillion, easily overtaking Apple as the world's most valuable listed firm, but missing the $2 trillion initially targeted by Crown Prince Mohammed bin Salman. Doubts over whether the Saudi royal family uses Aramco as its personal piggy bank, spooking those who initially dreamed of a listing on a big Western stock exchange. Still, Saudi Aramco on track to beat the 2014 listing of Chinese online sales giant Alibaba as the world's biggest ever flotation. Joining us, Paula Rodriguez-Massieu, Senior Oil Markets Analyst at consultants Rystad Energy. Thanks for being with us.
Yeah, thanks for inviting me.
It's an interesting point in time because this will be a snapshot of what one oil company, not any oil company, is doing. But this isn't just a story about finance and oil, this is trading. This is about the future of energy, really. And you wonder at this point in time, for you, why does this public listing matter, I would say?
I mean, it matters a lot. The thing is, that's the thing with highly polarized topics, that you have to basically have truths being said on each side, and both sides missing most of the facts. And I think the oil industry needs to accept that demand is going to peak, and they need to accept whether they like it or not, that demand is going to peak probably not on 50 years from now, but probably on the 10 next years. And the environmentalists, they need to accept that even though demand is going to peak, it's not going to fall to zero. And it's not going to fall to zero, not on the next 10 years, not on the next 50 years, probably not on the next 100 years. And this is basically, to understand this, it's very important to understand the strategy of Saudi Arabia, because basically this is what Saudi Arabia, or Saudi Aramco in this case, is telling to its investor. Listen, we know that demand oil or the demand for oil is going to peak, but we have the lowest by far cost of production, and we actually have the least intensity of carbon to produce our oil, and then that's where they're playing. They are basically trying to position themselves as the last man standing out there.
Yeah, the Economist recently ran a cover story based on the research from your firm in which they said that was the strategy. Take on the other big oil companies and take this gamble, like you say, that oil is going to peak at some point soon, and therefore Saudi Aramco is going to corner the market effectively. Will that strategy work?
Yeah, well, that's a problem. The thing is that right now we're talking about Aramco as the company. But when you talk about Saudi Arabia as the country, even though it can be hard to separate them, like when one
there
starts
are blurred lines
and the other
there.
finish.
Yeah.
The thing is that even though Saudi Aramco have the lowest cost of production, and they're going to be probably the last man standing, Saudi Arabia needs an oil price of around $85 per barrel to actually balance its budget, which brings us back to the APO. That's the reason why they want to do the APO, because they want to raise the necessary means to fund the diversification of its economy. Because even if Saudi Aramco is online to stand despite the climate change and despite the threat of peak oil, of peak demand, the country is going to have more problems to withstand this on the line that we might not see ever again, oil price on $85 per barrel.
And the temptation must be there when you have a young and fast-growing population to use those profits instead for welfare, public services, rather than that energy transition you mentioned.
Yeah, well, right now, they at least for what they have shown, it seems to be really a commitment to diversify the economy. But it raises as well a lot of questions regarding more to as to say if the country is really going to commit to leave Saudi Aramco by itself, if it's really going to be a company that is managed privately, and if it's going to take into if the financial concerns are going to come first, or if the country is going to come first. So it raises off these concerns. But when you actually analyze the strategy of Saudi Aramco, they have been very successful on the last years to actually diversify the company not only to be a producer, but also to create its own demand. So they have been buying and they have been investing into partnerships where the demand is going to be. This is the developing countries. So they have invested in refineries in Malaysia. They have recently commit to acquire 20% of Reliance in India. So they really are embarked in this strategy into be the last man standing, not only from their costs, but also from creating its own demand and allocated the production in the future.
Paulo Rodriguez Massieu, 2 weeks ago, MBS, the Crown Prince, he goes on this tour of the region. Was it a little bit about twisting the arms of the other Gulf Cooperation Council countries to invest in Saudi Aramco, or was it all about that?
Yeah, it's probably all about that. They definitely want, as they actually retrieve from doing the APO internationally, right now is going to be local. They're still counting not only on the money coming from Saudi Arabia, but also from its neighbor, also for its allies. And the success of the IPO, is part of it. Is the neighbors are actually embark also into investing into the IPO.
So when Kuwait, for instance, announces a big investment in Saudi Aramco, is that a business decision or a political decision?
I think it's both. It is a business decision and it is a political decision, because when you analyze, I mean, this is not an all-suit-fits-all kind of situation. Every company is going to embark on a different strategy towards the energy transition. You take the example of Equinor that wants to become the biggest wind producer, or take the example of Shell that want to now is producing more gas than oil. Saudi Arabia's strategy is we are going to be the last man standing on the oil industry. It is probably oil is peaking next 10 years, next 20 years, we don't know. But the strategy is, even though oil is peaking, we are going to be here producing at the cheapest price. We're going to be producers at the cheapest carbon intensity. And that is going to give us basically the edge on a world with a carbon constrained budget. Right. So this is basically the message.
And the irony is, on the day Thursday that it starts publicly trading over in Vienna, there's going to be a meeting of OPEC leaders. They're trying to figure out it. They're looking at the short term here. Yeah. How do we drive back up the price of oil? Is that mission impossible?
Yeah, well, it's basically all connected. This is one of the reasons actually why I believe that the IPO has been speed up after so much year of delays. And it's exactly because Saudi Arabia, I think they see that 2020 is going to be a very turbulent year for the oil prices. It is already a very turbulent year now in 2019, but it's going to continue and probably intensify into 2020. And now, tomorrow and on Friday, they are going to be discussing whether they want to extend the cuts, whether they want to deepen the cuts, or whether they stop altogether. And on the most likely scenario is that actually they're going to extend the cuts, but the message of Rising Energy is clear. That won't be enough. If they don't cut more production into 2020, more than they already are, then the oil market is going to be unbalanced into 2020. And that is a big risk for Saudi Arabia and for their APO if the oil price actually crash.
One final question for you. While this is all going on, there's that UN climate summit taking place in Madrid. Do you feel as though when you do your job, when you look at the oil markets, that it's two parallel universes, or are they interconnected?
Exactly. That brings me back to my first statement. Right now, you basically have two sides saying half-truths, and neither of the other actually recognize each other and accept the fact, which is oil demand is peaking, growth will decelerate, but oil will still be there for a long time, for the same reason why we're still consuming coal, for the same reason why we're still burning wood, because all the technological advancement won't be enough to actually stop from one day to another, or at least not in the next decade, our whole oil consumption, even though growth will decelerate. And that's a hard truth that all companies need to accept, that they won't be the big oil anymore. They probably will continue to be big, but probably they won't be doing oil. They will be doing something else.
Something else instead, those energy companies. Paulo Rodriguez Massieu of Restart Energy, thank you for joining us here on France 24.
Thank you.
Stay with us. There's more to come.